Hello, everyone, and good morning to you. And first of all, I would like to say Happy New Year to every single one of you who has been part of my trading journey throughout the course of last year. And welcome to those who are watching this video, my video tutorials for the first time, as we take a fresh look at the US oil for the new year and the new week. Well, at this point, I would like us to have an holistic view where I will be refreshing our memories regarding what we have been seeing in the last 2 years on the US oil. So, right on the weekly time frame, as you can see on your screen right now, we definitely observed that we have a bullish momentum in the last 2 years. That is since March of 2020. And as a result of this, we were able to connect the series of higher lows here to give us that resultant bullish trend line that you can see on your screen right now. Now, besides the bullish trend line we have here on the daily time frame is the important key level at the $85 level, which has been a major determinant of price action in the last um let's say 1 year 2 months thereabout. As you can see what happened here in the month of October, we saw how that level was holding selling pressure at one point in time before we witnessed a breakout of that key level in the month of January of last year. And in the last couple of months, that is since the month of May, we saw a little consolidation phase around the $85 level where we started seeing buy pressure, but this was negated by sellers as we finally saw the breakdown of the bullish trend line here in the month of November. And from a technical standpoint, whenever we have a breakdown like this, we should be expecting at one point in time price is likely going to come back, do a retest of either the 85 or the bullish trend line here, probably to incite another wave of bearish momentum, or we could probably see price break above that bullish trend line to incite another wave of bullish momentum. However, to get things more clearly at this point in time, it's very appropriate that we scale down to our lower time frame, where I want us to have a little bit of insight into what has been happening here since the month of September of last year. And the result of these, I will be scaling down to the daily time frame. And on the daily time frame here, the first thing you would observe in the last 3 to 4 months now is the fact that price action has been caught within a consolidation phase between the $93 level and the $78 area, hereby emphasizing the indecision in this market. And if we look at what happened here within this month, that is the month of September and the later part of the month of November, we saw how the $93.50 level was holding selling pressure. So that was a resistant point of the channel. And then around the $78 level was holding by pressure. And that area is the support level of that channel to further emphasize the indecision in this market at this point in time. Now, in addition to that consolidation phase between the $93.50 level and the $78 level, is the bearish trend line that we have here that has been holding down selling pressure since the month of June last year. As you can see, price consistently and uniformly respected that bearish trend line to emphasize the strength of the sellers. And this led to the breakdown of that demand zone here during the first week of the month of December. So, with a breakdown of that structure, that is the breakdown of that demand zone, remember we saw the breakdown of the $85 level here also during the mid month of November. Of the opinion that sellers are very strong at this point in time. But one thing about this kind of technical structure is that whenever we have a breakdown of a structure, there is a tendency that price might likely come back to do a retest of that structure, which is the bullish trend line or probably the $85 level to incite another bearish move to the downside, which I showed you on the daily time frame. But one thing about this current structure is the fact that despite the breakdown of the demand zone here, we saw that as soon as price tested the $70 level, we begin to see buy pressure coming from that area in such a way that price has climbed up above the $78 level to emphasize that buyers are likely coming in this market. Now, if we look further into the structure here, you will notice that price action evolved into a reversal pattern, probably in the form of a double bottom structure. Here we saw the first touch, we saw the second touch, where the $78 level is serving as a neckline of that area. And in the last couple of weeks, we saw the breakout of the $78 level, and then price has come back into the $78 area with couple of buying pressure. We saw that after the breakout of the neckline at the $78 level, price has come back into the structure here to continue to emphasize some buying pressure around that area as price action came back to do a retest of that structure. And since the beginning of last week trading session, we saw that as soon as price got into the $80 level, we have been witnessing selling pressure from that level around the $80 area to emphasize some selling strength around that area. So as we head into the new year and at the same time a new week, I want us to be using the $80 level as our key guide to trading activities for this week. Now, if you look at the structure here and look at what happened during the later part of last week trading session, that was on Friday last week, we saw a buy pressure which led to this engulfing candle that we have here, where it has tested the $80 level one more time. So as we head into the new week here, we shall be looking out for how price action is going to be relating to the $80 level to decide if we are going to be buying or we are going to be selling the US oil. So to buy the US oil at this point, I will be looking forward to price breaking out of the $80 level here, which might likely share a conference with the bearish trend line we identified earlier, where a retest of structure followed by buying pressure right around this area is likely going to be giving us an opportunity to buy the US oil. However, if selling pressure continues right below the $80 level, something like this, let me give you a visual representation of what I'm talking about here. So if we start seeing selling pressure around this area, and if you notice, you see that this level also shares a confluence with that bearish trend line, and we start seeing selling pressure right around that area, which might likely break down the $78 level, then at this point, I want to be thinking of selling the US oil. So, like I've said earlier, going into the new week, we have the $80 level there to serve as a guide for our trading activity. However, with the simple structure I was able to identify here on the daily time frame, it's important I scale down to a much lower time frame where I want us to be seeing what I was able to identify that will make things a little bit much easier for us to trade for the new week. Now, if we scale down to the 4 hours time frame, I was able to identify, hold on a second, let me show you what I was able to see here. So on the 4 hours time frame, this is the first thing I was able to identify here. I noticed that we have a descending channel since the month of October. So after connecting the series of lower highs and lower lows, we have that descending channel figured out here. But one thing caught my attention was the fact that in the on the 21st of December, we finally witnessed the breakout of that resistant level of descending channel to emphasize the strength of the bias at this point. And if we look at what has been happening since the second week of the month of November, we have been seeing higher lows here. And as a result of this, I was able to connect the higher lows here to give me that bullish trend line. So in the last 3 weeks here on the US oil, it's very evident that buyers have been very emphatic on moving price action to the upside. So, like we identified on the daily time frame, the importance of the $80 level here, we can see that we have a little breakout of the $80 level during the last week trading session. As we saw, buyers are beginning to gain some momentum breaking out of that $80 level, which has been holding selling pressure for quite a while. And going into the new week, I want to see how price action will relate to the structure here. So are we going to be seeing buy pressure come in right above the $80 level? If that is going to be happening, then we shall be getting ready to buy the US oil. However, if selling pressure continues below the structure and if it breaks down that bullish trend line here, then this might likely be a signal for us to be selling the US oil for this week. So I would like to pause the video at this point and to come back right in the comment section to give you an update after monitoring our price action is going to be relating to the current structure around the $80 level during the early hours of the week so that I can give you an insight into how I intend to take a trading opportunity at the beginning of the week. I hope this video has been of immense help in making your own personal decision on the US oil for this coming week. And if it did, kindly support this project by clicking the like button. Don't forget to follow me on my TradingView platform at Dark Sherry so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and once again, I wish you a happy new year, and I look forward to seeing you right in the comment section of this video as we get ourselves prepared during the early hours of the new week. Do have a wonderful day. Bye bye.